Good morning, students. Welcome you all once again in virtual coaching classes organized by Board of Studies of ICAI. I am CA Dr. Alok Garg, and today I am going to take the second and the last session on India's 38 intangible assets. So, students, we have started this standard on 17th March. That was the first session. And on that day, we have discussed the agenda of the standard. We have discussed the objective. We have discussed the scope of the standard. We have discussed the definition of an asset as well as definition of intangible asset. And then we discussed, okay, it is meeting the definition of intangible asset, right? But whether this intangible resource can be capitalized as an intangible assets, can be recognized as an intangible asset. So we have gone through with the recognition criteria as well. And then we discussed the initial recognition and measurement. So once an intangible resource has to be capitalized or recognized as an intangible asset, in that case, what is the measurement for that intangible asset? Then we talked about the cost model, right? That intangible asset has to be initially recognized at cost. Or I can say that most of the non-current assets has to be initially recognized at cost, except biological assets under agriculture standard, right? So when you read Ind AS 41, you will find that this biological asset under agricultural standard is not recognized at cost. It has to be recognized at fair value less cost to sell. But otherwise, most of the assets are recognized at cost, like PP, investment property, your intangible assets, right? So students, then we discussed mode of intangible assets. In mode of intangible asset, we talked about if an intangible asset has to be acquired by way of separate acquisition, then what is the accounting treatment? I mean to say, at what value such intangible asset has to be measured, right? Then we discussed about business combination. For example, an entity is acquiring another entity. Then in that case, they are acquiring some intangible assets, or there are some intangible assets which has not been recognized by that entity. Why? Because those were internally generated intangible assets, right? But since this company is paying for those intangible assets, this company is paying extra for those intangible assets, and hence those intangible assets are also required to be recognized and also required to be recognized in the books of the acquirer. But at what value? It has to be at fair value, right? Then we talked about government grants, right? Then we talked about exchange of assets as well. Then the second one is subsequent recognition, where we will be talking about the revaluation model, right? Amortization concept and useful life concept of intangible assets. Objective we have discussed. The objective of the standard is to prescribe the accounting treatment for intangible assets which are not dealt in another standard. And it also talked about recognition criteria. It talked about how to measure, how to calculate the carrying value at the balance sheet date, at the reporting date. I mean to say carrying amount. Then we also discussed about the disclosures criteria. Then friends, we talked about the scope part, and we discussed that this intangible asset standard is applicable for all intangible assets, except a negative list has been given, except an intangible asset is covered by a specific standard. Then on that intangible asset, this standard is not applicable, and that specific standard is applicable. For example, financial asset, for example, exploration and evaluation asset, deferred tax asset, non-current asset held for sale in case of intangible asset, asset arising from employee benefits, goodwill arising in business combination, right? So intangible asset held for sale in the ordinary course of business, like SAP, Oracle, Infosys, TCS. If these entities are selling software, so these softwares are inventory for these entities, because these are getting sold out in the ordinary course of business, right? I hope it is clear to everyone so far. Coming to the definition, then we talked about what is an asset, and we discussed that an asset is a resource controlled by an entity as a result of past events and from which future economic benefit are expected to flow to the entity. And we discussed what is meant by control and what is meant by future economic benefits. Then we talked about that what is the definition of an intangible asset, and there were three important components of definition of intangible asset. One, it should be identifiable. The second, it should be non-monetary asset. It should be identifiable, it should be non-monetary asset, and it should not have any physical substance. If an asset is having a physical substance, then that asset is not an intangible asset. So the first condition was it should be without physical substance. The second one is it should be non-monetary asset. And the third one is it should be identifiable, right? And we talked about what is meant by non-monetary asset. Non-monetary asset are those assets which are cash settled, right? Which are cash settled, which can be settled into a fixed amount of cash. Okay. So for example, can you give me an example of monetary asset and non-monetary asset? So monetary asset we discussed. Monetary assets are those assets which has to be settled in a fixed amount or fixed unit of cash, right? And what is non-monetary asset? Asset which are not monetary asset is non-monetary asset, right? Yes, Megha has given an example. That example of monetary asset are cash, bank, good Megha, fixed deposit, trade receivables, good. And what are the example of non-monetary asset? What are the example of non-monetary asset? Let me see. You are right, Utkarsh. Example of non-monetary asset is like inventory, property, plant and equipment, intangible assets, right? Investment property, biological asset. These are the example of non-monetary asset. If there is an inventory which is lying in the godown of the company or inventory which is lying in the store of the company, it is non-monetary asset, right? Because nobody knows whether this inventory will be sold in the due course or not, right? Once the inventory has been sold out, even on the credit, right? So for example, the inventory has been sold out, it become a cash, right? Or if the inventory has been sold out on credit, it become a receivable. Okay. So once it become a receivable, we are aware that I have to receive 100 rupees of cash, right? So now this receivable has to be converted into a fixed amount of cash, right? We are not going by the intention whether that fellow will give 100 rupees or not, but as an entity, the entity has a contractual right to receive 100 rupees of cash, which is fixed, which is determinable, and this has to be settled in cash, right? Is it clear? Yeah, good Sairam, good Srinji. So we talked about without physical substance, non-monetary asset. And what is identifiable? And we have discussed that an asset is considered as an identifiable if it is separable. When I say separable, it should be separated from the entity. For example, goodwill. Can I say goodwill can be separated from the entity? What is goodwill? Goodwill is a value to the business. Goodwill is a reputation. Goodwill is an image, right? So if the tangible net worth of a business is 100 rupees, right? And if that business has a goodwill, in that case, the acquirer will acquire this entity at not 100 rupees. Acquirer will acquire at 120, 125. So why he is paying 20 or 25 rupees extra? Just to get that business, right? So goodwill cannot be separated from the business. Goodwill cannot be sold individually. Goodwill cannot be sold individually. Goodwill cannot be let out. Good cannot be rented, cannot be exchanged individually. Goodwill go on hand in hand with the business, right? When business will sold out, only then goodwill can travel along with the business. Goodwill cannot travel alone with the business. Goodwill always travel along with the business, right? So I have used word alone means akela and along means saath mein, right? So goodwill cannot be separated from business and hence goodwill is not meeting the separable criteria, right? Understood, right? So that is why internally generated goodwill is not allowed to be recognized and capitalized. Or an asset is considered as identifiable if it arises from contractual or other legal rights. For example, if Government of India has given a broadcasting license to an entity, and this broadcasting license is non-transferable, right? It means it cannot be sold, it cannot be separated from the business, but it is arising from contractual or legal rights, and hence it is considered as identifiable. So most of the intangible asset, when acquired, so they carries contractual or other legal rights. Doesn't matter if it is separable or not. If it is actually acquired, so generally they carry the contractual or other legal rights, and that is why they are considered as identifiable. So you have to look at the two conditions. It is not and, it is or. First, you need to see whether it is separable. If it is separable, then yes, it can be considered as identifiable. If it is not separable, you have to see whether it is arising from contractual or legal right. If it is arising from contractual or legal right, you should consider it as identifiable. So friends, we discussed the definition. An asset, intangible asset, is an identifiable non-monetary asset without having physical substance. Then we discussed a case study on this. Then we talked about the concept of control. What is meant by control? Control generally arises from power. And what is control? Control means power to obtain the future economic benefit or power to restrict the access to future economic benefit of others, right? So generally, this control arises from legal right. For example, I have written a book and I have got it copyright. The content is copyright with me. So if anyone will reproduce or copy my content, I can sue him, right? If I do not have a copyright of that, I cannot sue him, right? Sonu Nigam, if Sonu Nigam is singing a song and if that Sonu Nigam has a copyright over that song, if anyone copy that song, Sonu Nigam can sue him, okay? So friends, if a company has given a training to the staff, can I say that it is meeting the control criteria? Answer is no. Staff training is not meeting the control criteria. Advertisement is not meeting the control criteria. So advertisement expenses, staff training expenses is not going to be capitalized, right? Why? Because it is not meeting the control criteria. So future economic benefit, we have discussed that future economic benefit means a capacity to earn revenue from sale of products and services. And it is not only earning revenue, even though if there is a cost savings, it also resulting into the future economic benefits, right? So we discussed we discussed control, we discussed future economic benefit, we discussed your identifiability criteria, right? So we talked about all these aspects. And when an item has to be recognized an intangible asset, when it is meeting the definition of intangible asset, when it is probable that future economic benefit will flow to the entity and cost can be measured reliably, right? Intangible asset has to be initially measured at cost. Mode of acquisition we have discussed. We have discussed separate acquisition. We have discussed business combination. We have discussed government grant. Okay. We have discussed internally generated goodwill, and we have discussed exchange of assets as well. While discussing the cost of an asset, we talked about that cost includes initially intangible asset has to be measured at cost, and cost includes purchase price, including import duties and non-refundable taxes, right? And if there is any discount or rebate which is given to for purchasing of intangible asset, that has to be deducted. For example, if a company A Limited has purchased a software from Oracle, right? So Oracle has sold that software at 1 crore rupees. So 1 crore rupees is a purchase price, and Oracle has also charged GST of 18% on that software. So 1 crore plus 18 lakh, assuming this GST is non-recoverable, assuming, right? If it is recoverable, I mean to say if it is refundable, then it is not going to the part of the cost of intangible asset. But if it is refundable and recoverable, if it is refundable and recoverable, it is not being part of the intangible asset. But if it is recoverable, if it is non-recoverable, then it becomes part of the intangible asset, right? Part of the cost. So 1 crore plus 18 lakh, 1 crore 18 lakh. Suppose Oracle has given 5% discount on this software. So this 5% discount has to be deducted over that. So 1 crore minus 5%, 5 lakh. So on 95 lakh, you have to calculate GST. Assuming it is non-recoverable, so GST will also be capitalized as a cost of the intangible asset. And standard says that if there are directly attributable costs, so directly attributable costs are also required to be taken as a part of the cost of the asset, right? For example, testing fee, for example, professional fee, okay? For example, registration charges, for example, legal fees. So these kind of fees are required to be, these kind of expenses are required to be capitalized as a part of the cost of intangible asset. What is meant by directly attributable costs? In layman language, if this intangible asset has not been acquired, developed, or constructed, probably this cost would not have been incurred. So if the asset would not have been there, this cost would not have been there. It means this is an example of directly attributable cost. What are the directly attributable costs? The cost incurred for bringing the asset into the location and condition necessary as intended by the management, right? That is known as a directly attributable cost. In PP standard, we have also talked about the third cost, which was dismantling cost. But since intangible asset is not having a physical substance, and hence it is not considered as a, and hence this cost will not become part of the cost of intangible asset, right? Because it is not having physical substance, so there is no question arising for the dismantling cost of intangible asset. That is why I have just did a cross mark here. Then we discussed what is the cost which is going to be included, what is the cost which is not a allowable cost for capitalization. Employee benefits, professional fee, testing cost, legal fees, registration charges. These are the allowable costs. What are the costs which are not allowed? For example, if a company is spending on advertisement, promotion, branding, so these are not allowable costs. If the company is providing some training for doing a business in a new location or with a new class of customer, it is not an allowable cost. Administration and other general overhead cost is also not an allowable cost, right? Then we talked about deferred payment credit concept. Okay, we have discussed that intangible asset has to be measured at cost. But if a company is purchasing a software on, let's say, 2 years credit term, okay, and of course the company is paying extra, so at what value the intangible asset has to be measured? So intangible asset has to be measured initially at cash price equivalent. If the company would have paid within the normal credit term which the supplier is giving to everyone, right? So at that value, intangible asset is going to be capitalized. But the difference between the cash price equivalent and the consideration which is paid by the company, right? So the difference has to be recognized as a finance cost, as an interest cost in the profit and loss account. Sir, if the asset is a qualifying asset, okay, in that case, whether we can capitalize this interest cost? Yes, we can capitalize this interest cost as per Ind AS 23 borrowing cost standard, right? But if it is a ready for use asset, when we are acquiring this software, it is available for use, it is ready for use, right? It is not taking a substantial period of time. It is not a qualifying asset. In that case, interest cost will be charged to P&L. Then we did a case study on separate acquisition, right? We did one more case study from Institute study material. Then we talked about a business combination, that if an asset is acquired by way of a business combination, then we are going to capitalize that asset. We are going to capitalize that intangible asset at fair value, right? So in that case, the cost becomes a fair value, okay? And we did illustration number 5 from Institute study material. Then we talked about if intangible asset is acquired by way of a government grant, right? For example, government is giving a free, or let's say at a concessional rate, airport lending right, import licenses, quotas, right to access other restricted resources. For example, government is giving a mining right free of cost. So at what value such right is going to be capitalized? So there are two options. Option number 1, recognize intangible asset and government grant at fair value. So intangible asset in the asset side, government grant in the liability side, right? Amortize intangible asset over the useful life, right? Over the period over which the government has given a right. And amortize this liability, which is a government grant, over the period of useful life in the same manner, right? So this government grant amortization will give you an income. This amortization of intangible asset will give you an expense, right? And your P&L will be neutral. Okay, this P&L will be neutral. The second option is you can capitalize, you can recognize, you can measure this intangible asset at nominal value plus any expenditure which is directly attributable to preparing the asset for its intended use, right? For example, the government is only charging 50,000 rupees for the registration, or for transferring the rights, but as a transfer fees, okay, or as a documentation charges. So in that case, you are required to capitalize this intangible asset at 50,000 rupees, right? At 50,000 rupees. Is it clear? I hope it is clear. So there are two options. So in accordance with Ind AS 20, what is Ind AS 20? It is government grant standard. In accordance with Ind AS 20, record both intangible asset and grants at fair value, or recognize the asset initially at nominal amount plus an expenditure that is directly attributable for preparing the asset for its intended use, right? Then we have discussed a concept of exchange of asset. In case of exchange of asset, first of all, you need to see whether this transaction is having a commercial substance. If the transaction is not having a commercial substance, then the asset acquired has to be recognized at cost. Okay, at cost. What cost? Has to be recognized at cost of asset given up, so that there will not be any profit or loss in the P&L, right? For example, the company is selling one software, the company is surrendering one software and acquiring another software, right? So the acquiring software, the software which the company is purchasing has to be recognized at the cost of the software given up, right? So what is the accounting entry? Accounting entry is intangible asset, which is software purchased account debit. For example, the cost of asset given up, the carrying value of asset given up is 100 rupees. So intangible asset, software purchased account debit 100 rupees, to software surrendered intangible asset 100 rupees, right? There is no profit, no loss. In the books, it was 100 rupees. Now it is 100 rupees, right? But if the transaction is having a commercial substance, then intangible asset acquired has to be recognized at fair value. But you have to follow some hierarchy. The first one is you need to recognize, or you need to measure the asset purchased at a fair value of asset given up. Sir, if the fair value of asset given up is not there, then can we measure this asset purchase at fair value of asset purchased? Yes. If the fair value of the asset given up is not there, you can go for fair value of asset acquired, right? Sir, if both the fair values are not given, then you can go for WDV of the asset given up, because it will always be there, right? If you have an asset, the value must be there in your books of accounts. Is it clear? Yeah. So students, in the last 20 minutes, I have summarized the last class, right? Now I have to move to the agenda of today's session. I'll take a 15-second pause. So the students who are watching this video live, if they have any query relating to the last class, they can just put your queries on the query box. And of course, I will answer to those queries, and then I'll move on for today's agenda. Megha is saying, thank you, sir. Everything is clear so far. Thanks for the quick revision. My pleasure, Megha. Any queries, guys? Science, Rinidhi, Utkarsh, anyone else? Yeah, let's move on. So students, the next concept is internally generated intangible asset. Okay. Now I'll go on my class board, which is this Excel file. So the next concept is internally generated. First of all, let me talk about internally generated goodwill. Right. So internally generated goodwill. For example, in the last 10 years, for example, I'm teaching since last 10 years, right? And I have created a goodwill. I have created a brand name of Alok Garg, right? Or let's say a brand name of my book Treatise on Ind AS, right? So the question arises, with the hard efforts or with the huge efforts which I have put in the last 10 years, can I recognize my goodwill, my brand name? Can I recognize as my goodwill or brand name on a fair value? For example, if I'm preparing my balance sheet, can I recognize my goodwill or brand name? Guys, can I do that? Can I recognize my goodwill or brand name? Answer is I cannot recognize my goodwill or brand name. Why? Because it is not meeting the separable criteria. It is not meeting the identifiable criteria, right? So internally generated goodwill is not allowed to be capitalized. It is not allowed to be recognized, right? So internally generated goodwill cannot be capitalized. Okay. The recognition is prohibited as per Ind AS 38, right? Okay. The second one is now we'll be talking about internally generated intangible assets, right? Internally generated intangible assets. Now the question arises. Internally generated goodwill is not allowed to be capitalized, but what about internally generated intangible assets? For example, there are pharma companies, there is IT companies, right? And they are doing a lot of research and development. They are doing a lot of research, right? And pharma companies, after a research of, let's say, years of years, pharma company has developed a formula for manufacturing a medicine, right? So pharma companies developed a formula which they have patented, right? Which they have patented. Now the question arises, sir, can we recognize such formula in the books of accounts? Can we recognize such patent in the books of accounts? Yeah. Can we recognize this? Yeah. Yes, we can recognize this because these pharma companies are getting this formula patented and they can recognize this internally generated intangible asset. Why? Because this formula is also meeting the separable criteria. For example, Renbexi, Sun Pharma. Sun Pharma has done a lot of research and Sun Pharma has developed a formula that this composition, this medicine, this formula can this formula is useful for, you know, protecting from such kind of disease, or this formula, this composition, this salt is useful for curing such disease, right? So in this case, if there will be this kind of diseases, okay, or for manufacturing of medicine for that particular disease, Sun Pharma can sell that patent. Sun Pharma can sell that formula to other pharma companies as well, right? And how the Sun Pharma has developed this formula? With a lot of research and development, where their scientists, their doctors were doing a lot of research and development in their research house, okay, and after researching for number of years, for huge years, and spending a lot of money, they have developed a formula, right? And this formula can be sold. So it is meeting the separable criteria as well, and hence this formula can be capitalized, although it is an internally generated intangible asset, but it can be capitalized, right? Sir, if I'm talking about internally generated intangible asset, okay, I understand that this formula being a separable, meeting a separable criteria, can be capitalized as an intangible asset, right? But sir, I just need to understand one thing. What are the different phases of internally generated intangible assets? So guys, let's take a practical example. This COVID was started in December 2019, right? This COVID. And in India, this was started spreading in February 2020, right? And there was a lockdown in March 20. And this virus was unknown virus. So first time we had seen this kind of disease, right? First time we have seen in our life. So a lot of pharmaceutical companies were involved, were doing research to find the medicine, to find the formula which can create antibodies to fight against such coronavirus, right? If I talk about biotech, if I talk about Renbexi, if I talk about Sun Pharma, So a lot of companies were doing research for finding the antivirus, like, right, for finding the antivirus which can fight against COVID, right, coronavirus. Now these companies have spent a lot of money on the research, right? And when these companies have started doing this research, they were not sure that whether they will be able to develop a formula, develop a composition, develop a fold, whether they will be able to develop a vaccination which can help, or which can help, or which can cure such kind of coronavirus, right? They were not sure, but of course they have started and they were doing a research, right? Few companies have succeeded and they have developed this COVID vaccine, right? And if I talk about development of COVID vaccine in India, the population is 130 crores, and the entire world has faced this COVID problem since January, or let's say February 2020, right? So if a company which have developed such formula, of course, if this company has to cater the Indian population, this 130 crore vaccine manufacturing is not easy. So probably they will share, or they will sell this formula to other pharma companies as well. Okay, it is win-win situation for other pharma companies as well, because they will purchase the formula, they will develop the vaccine, and they will earn huge money as well, right? So this formula has been identified from all about the research and development, These companies have done a lot of research, and after the lot of research, they got succeeded, right? So friends, when I'm talking about internally generated intangible asset, so internally generated intangible asset has two phases, okay? There are two phases. There are two phases of internally generated intangible asset, right? And for the sake of simplicity, I will write this internally generated intangible asset as IGIA, internally generated intangible, right? There are two phases of internally generated intangible asset. Which are those two phases? The first one is research phase, and the second one is development phase. The first one is research phase, and the second one is development phase. Yeah, research phase and development phase. Okay. There are two phases of internally generated intangible asset: research phase and development phase. Okay. Clear? What is meant by research phase? A research phase means acquisition of knowledge. Research phase means acquisition of knowledge. What is meant by development phase? Development phase means application of knowledge. Okay. So I've told you, a lot of pharma companies were engaged in doing a research for finding a medicine or a drug which can fight against coronavirus, right? Few companies succeeded. Majority of the companies have not succeeded. So when they have started, they were just hitting their head that what could be the composition, what could be the salt which can help us in protecting from the coronavirus. No one was aware. No one was aware. Everyone was just doing a research. They were just applying a lot of permutation and combinations, right? If we have to mix this, if we have to put this, of course this will be beneficial, this will not be beneficial. They have done a lot of research on animals, right? So whenever any medicine got invented, so normally they have done the experiment on the animals, right? so when they have started, they were just doing a research. They were not aware whether they will be succeeded or not succeeded. They were just finding the alternatives. They were searching the alternatives. What could be the alternative? Okay. So what is research? Research is known as acquisition of knowledge. It is known as acquisition of knowledge. So when the companies were doing research, they were not certain whether they will be able to reach at a conclusion or not, right? So hence standard says that whatever you are spending on your research phase, it has to be expensed off in the P&L. It has to be expensed off in the P&L, right? So research phase amount spent in research phase should be charged to P&L, right? Amount spent in research phase should be charged to P&L. Okay. Now, what is development phase? So I told you that internally generated intangible asset has two phases, research phase and development phase. So when these companies have started searching the alternative to fight antibodies, to create antibodies, to find an antivirus which can fight against coronavirus. So of course they have done a lot of research, but once they have established that yes, now we are on the right track. So we have found that which composition, which salt can help us in protecting from coronavirus, in fighting against coronavirus. So of course that phase is known as a development phase. So when they are certain that yes, now we are on the right track and we can win, we can find the alternative for this particular problem, right? So once the things become certain, once they have acquired a knowledge, right? So they have done a lot of research, they have applied a lot of alternatives, right? And now they are certain that yes, out of those alternatives, out of those information, those knowledge which we have gathered, we can apply this knowledge and we can reach to a conclusion, right? So what is a development phase? Development phase is an application of a knowledge. It means we have gathered a knowledge, now we have to apply a knowledge. So we are certain that we have reached to a conclusion, we can reach to a conclusion, we have reached at an advanced stage where we can apply our knowledge, right? So amount spent in research phase should be charged to P&L, but amount spent in development phase, amount spent in development phase should be capitalized. Should be amount spent in development phase should be capitalized, right? This should be capitalized. Is it clear? Amount spent in development phase should be capitalized, right? But now the question arises, sir, how can we say that the development phase has been started, right? Although this is a critical concept, we understood what is a research, what is a development. We understood that an internally generated intangible asset has to be go into these two different phases, right? But how can we say that it is a research phase and yes, from this date the development phase has been started, right? For example, this is the life cycle. From here the research has been started, okay, and for example it took 2 years, and here the company has succeeded, the company has reached to a conclusion, or the company has succeeded. So how can we say that this period was a research phase and this period was a development phase? How can I identify? So standard has given you a guidance, right? We'll talk about this. Standard has given you a guidance. Okay, what is the guidance? We'll talk about. But what is a research phase? The research phase is a phase where the company is finding the alternatives, where the company is just gathering or acquiring a knowledge, right? And what is a development phase? Development phase is a phase where the company has sufficient amount of knowledge and the company has to apply that knowledge, right? So amount spent in development phase should be capitalized, right? Amount spent in research phase should be charged to P&L, right? Is it clear? Is it clear, friends? Okay. Sir, the classic example could be, for example, you have enrolled into a CA curriculum, right? You want to become a chartered accountant. So till the time you are qualifying for CA, till the time you are qualifying, what is the ultimate objective? ultimate objective is to serve the profession, to earn money. So till the time you have not qualified CA, it is kind of a research phase. You are just acquiring knowledge, you are just gathering knowledge, right? So but once you become a chartered accountant, your development phase has been started, right? Now you have to apply your knowledge, right? So you have to reach it, you already have reached at a conclusion that yes, now I become a chartered accountant, now I can go into the auditing field, I can go into the taxation field. Okay, now I can apply my knowledge, whatever I have gathered so far. But before qualifying of CA, you are not clear whether you will be able to become a CA or you will not be able to become a CA, right? So friends, I hope this research phase and development phase is clear to all of you. Yeah, is it clear? Good. Now let's discuss this. Internally generated intangible asset has to be segregated into a research phase and development phase. Okay, and charge all expenses related to research phase to P&L. We have discussed about research and development, right? These two phases we have discussed. Now one of the student was asking, sir, how can I determine that development phase has been started and from this date I have to capitalize all the costs, right? Very good question. And standard has given a guidance for that. Standard has said that development costs are capitalized, or you can say that development phase is started if the entity is able to demonstrate, all of the following. What is that? If the entity is able to demonstrate a technical feasibility, if the entity is able to demonstrate the technical feasibility is there, means probably you must have heard that if the government has to, let's say government has to make a route, okay, or government has to prepare 100 km of road, government has to construct 100 km of road, right? So what they, or let's say government has to put a pipeline or government has to put a railway track, right? So normally what they do, they give this project to a consultant and they do a feasibility study, right? When I say feasibility study, whether putting this 100 km of railway track is feasible or not, I mean to say what should be the most optimal route for this 100 km, how many encroachment are there, whether any commercial residential society will fall under this track, right? So they just got a feasibility study done from a consultant, right? So what is meant by technical feasibility? Technical feasibility means whether technically this project is feasible or not, okay, whether it is worth doing this project or not. So whether it is technically feasible or not, right? So this is the meaning of technical feasibility. Second, so we can say that for internally generated intangible asset, if the technical feasibility is there, I can say that my development phase has been started, provided all other conditions should also met, right? Second, intention to complete the intangible asset and use or sell it, right? Intention to complete the intangible asset and use or sell. First, I'll give you a real life example. You guys have seen that there is a state government, right? There is a government in the state, and that government has taken some initiative for construction of some infra, right? So after 5 years, let's say government will change, okay? For example, earlier it was X government, now it is a Y government, okay? When this Y government come, they will put all the projects initiated by earlier government on hold. Normally. I'm not saying every time, okay? So just due to political agenda, political matters, political issues, they put the project initiated by earlier government on hold and they will start their own project. So what does it mean? It means they don't have the intention to complete that intangible asset, right? They don't have the intention to complete that project. So likewise, If an entity is able to demonstrate that yes, it is technically feasible, and the entity also should have intention to complete the intangible asset and use or sell it, right? And use or sell it. They should have intention to complete the intangible asset, and they should have intention to use or intention to sell it, right? So intent is again very important. For example, the company has already done a lot of research, but now they are not intended to complete this project. So if the intention is missing, you cannot say that my development phase has been started. And just think about this. If they don't have the intention, it means they will not complete the project. And if they will not complete the project, of course, future economic benefit will not be. And if future economic benefit will not be there, then you cannot capitalize, you cannot recognize this item as an intangible asset. Now what to do? Just expense off. Okay, sir, वो तो वैसे ही हो जाएगा. If it is a research phase, I mean to say if the development phase criteria has not been met, it will fall under research phase and it will charge to P&L. And of course, yes, it has to be charged to P&L. So what was the first condition? It should be technically feasible. Second, the management should have intention to complete the intangible asset, and management should have intention to use or sell the intangible asset, right? Third, ability to use or sell the intangible assets should be there. Ability to use or sell the intangible assets should be there, right? For example, management has an intention, the technical feasibility is there, but management is not able to use or sell the intangible asset. I will give you a hypothetical situation. The company has demonstrated that yes, now we have find an alternative. Now we have find a composition, a antivirus for this COVID, right? We find a vaccine for COVID, but government of India has banned this particular product. Okay? And government of India said that Indian companies are not allowed to manufacture COVID vaccine. I'm just giving a hypothetical example, guys. This is not a correct thing, right? This is not a correct example. This is not a correct statement. I'm just giving an example to make you guys understand, right? So for example, government of India has banned and clarified that Indian companies will not produce COVID vaccine, right? So although this company has found the alternative, although the technical feasibility is there, intention is there, but ability is missing. So after announcement from government of India, this entity is not able to use or sell the intangible asset, right? This entity will not be able to use or sell the intangible asset, right? So third condition, ability should be there. So as an auditor, as a management, you need to assess, okay, whether management will be able to use this product, whether management will be able to sell this product. If this feasibility is there, intention is there, ability is there, then we can say that yes, my development phase has been started. 4, how the intangible asset will generate future economic benefit. Fourth condition, yes, the probability of future economic benefit should have been there. Okay. The future economic benefit should be probable. The management can estimate that yes, once this intangible asset will complete, once this internally generated intangible asset will complete, we will be able to earn lakhs and crores, right? For example, all these pharmaceutical companies have done a projection. If we will be able to finalize this medicine, finalize this vaccine, okay, we will be able to earn this much of crores, right? They have just projected, like India is a 130 crore population. If we will cater only Indian market, probably we can contribute to 10 crore of vaccine, right? And if the cost is, let's say, 300 rupees and we will sell at 350 rupees, so we will have a 50 multiplied by 10 crore. We will have a 500 crore rupees of margin, right? So this is kind of a future economic benefit which they are estimating, that yes, we will be able to earn so much of money by inventing this medicine, by inventing this vaccine, right? So future economic benefits should be probable. Fifth condition, adequate financial and technical and other resources to complete the development. And here I'll give you a real life example, but it is not for intangible asset, but real life example regarding the adequacy of technical, financials and other resources. to complete the development. You must have seen the real estate projects, right? You guys must have seen the real estate projects. So when these real estate projects have been started, so in the initial 2-3 years, the company has just constructed 10-story, 20-story building, right? After that, the building goes on hold for years and years. And if you guys belongs to Delhi, or if you guys have, if you guys have visited Delhi, and of course, if you guys have visited Connaught Place, so at Barakhamba Road, there is a huge building. There is a tall building at Barakhamba Road, and I have seen that building was just in a semi-finished condition. This building was just lying idle, under construction condition since last 10-15 years, right? And probably the company would have spent 200-300 crores on construction of that building, but this building is still not completed, right? This building was on hold. The construction was on hold. So why it goes on hold? So probably the real estate builder or the construction company were running into the cash losses. They were running into the financial crisis. They don't have the sufficient funds to finalize the construction, So the fifth condition was, as a management and auditor, you need to see whether the company has adequate technical, financials, and other resources to complete the intangible asset, right? If it is a pharma company, do they have a scientist? Do they have doctors who can complete this research and development, right? Whether the company has sufficient financial resources, whether the company has sufficient working capital, whether the company has sufficient money to fund this research and development, right? So you need to see the adequacy of the resources as well, right? Last condition, ability to measure the expenditure attributable to the intangible asset. Ability to measure the expenditure attributable to the intangible asset, right? So what is the last condition? If I talk about this condition, future economic benefit is probable. And what is this condition? Cost can be measured reliably. You can reliably measure the cost. That what could be the probable cost in which this intangible asset will get completed. So friends, again repeating, as per standard, development phase is considered to be started when 6 conditions will be satisfied. What are those 6 conditions? Technical feasibility should be there. Intention to complete the intangible asset should be there. Ability to use the or sell the intangible asset will be there. Future economic benefits should be probable. Okay. Financial, technical, and other sources should be adequate, which can complete this intangible asset, right? Ability to measure the cost should be there, or cost can be measured reliably. We can say that the cost can be measured reliably, right? So friends, just to remember, I will give you a trick that how you will remember this 6 conditions, right? So let me show you this thing. Development phase is considered to be started if following conditions are met, right? Which of the following conditions are met? And I'll give you a definition in the form of pirates. Have you heard about this word, pirate? Have you seen the movie Pirates of the Caribbean? Have you heard about this word, pirate? Yeah. Have you heard about this word, pirate? P stands for probable future economic benefit. Future economic benefit. Okay. I stand for intention to complete and use or sell the asset. R stands for what is meaning of R? What is R stands for? Resources are adequate resources are adequate for completion of asset. Resources are adequate for completion of asset. Yeah, resources are adequate and available for completion of asset. Okay. First, probable future economic benefit is there. Probable is there. Intention is there, right? There must be an intention to complete. Intention to complete and use or sell the asset. Resources are adequate. What it stands for? A, ability. Ability to use or sell the intangible asset. Ability to use or sell the intangible asset. Ability to use or sell the intangible asset. Sell the intangible asset. Or I can say that as ability is there, right? E stands for technical feasibility. Technical feasibility. Technical feasibility must be there. E stands for expenditure. Can be measured reliably. Okay, pirate. Probable future economic benefit, intention to complete and use or sell the asset. Resources are adequate and available for completion of asset. Ability to use or sell the asset. Technical feasibility must be there. Expenditure can be measured reliably. These are the 6 conditions. And when these 6 conditions satisfied, you can say the development phase has been started. And remember, the first and last condition is nothing. It's a recognition criteria. Future economic benefits should be probable, cost can be measured reliably. This is nothing. It's a recognition criteria. And apart from these 2 criteria, what other criteria is there? Technical feasibility should be there. Intention should be there. Ability should be there. And resources should be there, right? Just think about this. Technical feasibility should be there. The project should be feasible. Intention should be there. Ability should be there. And resources should be there, right? You have an intention, you have an ability, but you don't have the resources. So how can you complete that, right? If these conditions are satisfied, then you can say that development phase has been started. And from the development phase, you have to capitalize this cost. Okay, you have to capitalize this cost. For example, A Limited has started doing a research for a medicine on 1st April 2019 for rupees 50 lakhs on 1st April 2019, right? The company has spent 50 lakhs till 31st May 2021. Okay. On 1st June 2021, the company has met all the criteria for development and spent rupees 30 lakhs more till 31st March 2022. Explain what will be the treatment of the above 80 lakh rupees, above rupees 80 lakhs. Guys, tell me what is the treatment of this 80 lakh? Tell me what is the treatment of this 80 lakhs? So what is the research phase here? What is the research phase? The research phase is from 1st April 2019 to 31st May 2021. Right, this is a research phase. What is the development phase? What is the development phase? The development phase is from 1st June 2021. Okay. So whatever amount the company is spent in research phase, how much amount? 50 lakhs should be charged to P&L. And this 30 lakhs should be capitalized as intangible asset. Right? This is the answer for this. I hope it is clear to everyone. Yeah. Now Sairam has a question, and Sai is asking, sir, if in research government providing grant for research, then what amount will be recognized? So Sairam, this will be covered under Ind AS 20, accounting for government grants. For example, in the research phase, the company has spent 50 lakh rupees and government has given a grant of 20 lakh rupees. So in this case, either you can recognize this 20 lakh rupees as other income and entire expense of 50 lakh rupees as an expense, or you can deduct the value of the grant from the expenses, from the cost, right? For example, 50 lakh is the expense, 20 is the government grant. So net you can recognize 30 lakh rupees of expenses in the P&L. So you have two approaches. One, 20 lakh other income related to government grant, 50 lakh rupees expenses on research, right? Second, 50 minus 20, 30 lakh rupees net expense on the research. So whatever you want to do, you can do. Clear? Is it clear? Yeah. You're right, Jay. 50 lakh is required to be expensed off and 30 lakh is required to be capital. Yeah. So this we have, we are clear. Okay. Sir, if we are not able to clear that is it a research phase or it is a development phase, if you are not clear, if you are confused, then treat that phase as a research phase and expense off, right? If not able to distinguish between research phase and development phase, treat the expenditure as research phase and expense off, and then you are required to expense off. But you cannot simply say that we are confused. You have to go through with these 6 conditions as well. You have to see whether these 6 conditions are meeting or not meeting. You have to do the due diligence, right? Straight away, you cannot say that, okay, we are confused. We are not able to clear. Is it research or is it development? Okay. So you have to demonstrate, right? It is not so easy. So cost of internally generated intangible asset is the sum of expenditure incurred from the date when the intangible asset first meet the recognition criteria. So from the date when the development phase has been started, from that date, the internally generated intangible assets are required to be capitalized. Okay. So whatever amount you will spend after meeting the development phase criteria, all the amount are required to be capitalized, right? So all the amount are required to be accumulated and it is going to be capitalized, right? So it went into the intangible asset held in progress, intangible asset WIP, like there is CWIP now, capital work in progress. So it is intangible asset work in progress. It is known as intangible asset under development till the time it will get completed, right? Internally generated goodwill shall not be recognized as an intangible asset. Why? Because it is not an identifiable resource. It is not separable. It is not arising from contractual or legal right. It is not a identifiable thing, right? We discussed that the cost of an internally generated intangible asset is the sum of expenditure incurred from the date when the intangible asset meet the development criteria. Okay, sir, in last year we have treated the expense as a research phase, right? And in the current year we have identified that, oh, this development phase was started 3 months ago. So in the last year this development phase was started. So now can I rectify this? Now can I capitalize this? Answer is no. So Ind AS 38 prohibits reinstatement of expenditure previously recognized as an expense. If previously you have recognized any expense as an expense in the P&L, subsequently you cannot capitalize, right? What cannot be capitalized? Cost which is not meeting the recognition criteria is not going to be capitalized. internally generated goodwill, brand, mastheads, publishing title, customer list, and similar in substance. For example, you are doing business since last 50 years. You have a huge portfolio of customer. You have, let's say, 100 customer in your portfolio. You cannot say that since this with my legacy, I have developed 100 customer and I should capitalize this customer list. So it is just like a goodwill. You cannot capitalize, right? It is not an identifiable resource. It is not meeting the identifiable criteria. Internally generated goodwill we have discussed, or cost already expensed are never capitalized, right? We have discussed just right. I hope it is clear to everyone so far. Guys, today we have discussed the mode of acquisition in terms of internally generated intangible asset, right? And if you have to see the practical real life example, you can see the Infosys Limited balance sheet. Infosys Limited. Infosys has an intangible asset which is research and development to the tune of 7,500 crores roughly, right? So these IT company, pharma companies has a lot of intangible asset under research and development kitty. Yeah. Let's discuss this case study on research and development. X Limited has been developing a new production process, and on 31st October 2016, it has been able to demonstrate that it is likely to enjoy future economic benefit from the research, right? X Limited has been developing a new production process, and on 31st October 2016, it has been able to demonstrate that it is likely to enjoy future economic benefit from the research, right? It incurred rupees 50 lakhs on this account till 31st October 2016. So on 31st October 2016, they have demonstrated that they can enjoy future economic benefit, right? And it incurred 50 lakh on this account till 31st October 16. So till the time they will be able to demonstrate, they were able to demonstrate till that time, they have spent around 31st, they have spent around 50 lakhs till 31st October. And 24 lakh afterwards up to 31st March 2017. And after 31st October, they have spent 24 lakh. As on 31st March 2017, as on balance sheet date, the company estimated the recoverable amount of this know-how embodied in the process at 22 lakhs. So they are developing a new production process, right? You have seen a lot of companies which are doing cost cutting, right? For example, the company has 10 plants. Okay. So what the company was thinking, if we will automate all the plants, we will have the cost cutting, we will have the cost savings in terms of removal of manual cost. The first, they will have a cost savings, right? Second, the accuracy and efficiency will increase because everything will get automated. Manual intervention will be lesser. So there will be a huge amount of increase in accuracy and efficiency, right? So friends, if I talk about this aspect, so what normally they will do? If they have to automate the plant, they have to spend a huge money on the automation, right? And no one knows whether it will be successful or not, right? So first of all, what they will do? First of all, they will do the research. Okay, they will apply this strategy on one plant. Okay, and once it will be successful, they will apply this strategy on the entire 10 plants. Okay, or they will apply this strategy to a particular process just to have a trial run. Whether this process will be successful or not, they will just apply this strategy to a single process, right? Okay, and if they found that it will be successful, they will apply this process to the entire business, right? So it is not as a technical know-how, okay, technical know-how. So guys, this company has developed a production process, okay, and this company was doing a lot of research, and on 31st October, they were able to demonstrate that yes, we will be able to have a future economic benefit from this research, right? So it means up to 31st October 16, it was a research phase. After 31st October, it is a development phase. So whatever amount you have spent till the research phase will go to the P&L. Whatever amount you have spent after research phase will go to the intangible asset. You have to capitalize the intangible asset for that, right? And at the reporting date, you have to compare the carrying value of the asset with the recoverable value of the asset. The carrying value is 24 lakh, but in the question it is given that the recoverable amount is only 22 lakh. It means there is an impairment loss of rupees 2 lakh, which has to be charged to P&L as per Ind AS 36, impairment of assets. Okay. It means the recoverable value is lower than the carrying value. It means there is an impairment loss of 2 lakh rupees, right? Now, probably you would have one question in your mind. Sir, you have told 6 conditions when the development phase will start. If the 6 conditions will be satisfied, then only development phase will get started. But in this question, only one condition was given. So my dear students, in the question, don't wait for all the 6 conditions until and unless something negative is given, right? Like in this case, it is given that they have been able to demonstrate that it will receive future economic benefit, and they have not given any negative words, right? For example, if the question will say they will be able to demonstrate the future economic benefit, but the company does not have intention to complete this project. If this negative line would have been given, then you cannot say that development phase has been started, right? But if a positive line is given, if it is given that it is technically feasible, it is technically viable, and no any information is given, then you can assume that the development phase has been started from the examination perspective, right? From the real life perspective, as in management, as an auditor, you need to document all these 6 conditions. I hope it is clear to all of you now. Guys, I would appreciate your response. I hope it is clear to all of you. Yeah. Is it clear to all of you? Only 3-4 students have replied so far. J, recoverable amount means at the reporting date, if this company has to sell this knowledge to somebody else, so the market value of this knowledge is 22 lakhs. The market value of this intangible asset under development, technical know-how is again an intangible asset, right? Intellectual property right is again an intangible asset. So the market value is 22 lakhs, but whatever we have capitalized is 24 lakhs. So what amount we have capitalized? We have capitalized 24 lakhs, right? So we are required to charge an impairment loss of 2 lakh rupees, right? Because if the recoverable amount is lower than the carrying value, you have to charge an impairment loss. I hope it is clear to you. Trinity has confirmed, yes sir, it is clear. Okay. Is it clear, guys? So guys, for every non-current asset at the reporting date, you have to see the impairment loss, right? You have to check if the recoverable value is lower than the carrying value, you have to charge an impairment loss. Okay. Yes, let's do another case study from Institute Study Material. X Pharmaceutical Limited seeks your opinion in respect of following accounting transaction. Okay, in respect of following accounting transaction. Acquired a 4-year license to manufacture a specialized drug at a cost of rupees 100 lakhs at the start of the year. Production commenced immediately. Right? Tell me what to do with this. Yeah, friends, what is the answer of this? Let's so these are the different transactions. So tell me, this company has acquired a license, 4-year license to manufacture a drug. So it is a case of acquisition, right? The company has purchased a license. So whether this license will be capitalized or not capitalized, and it is available for production as well. It is available for use, right? So whether this license will be capitalized or not to be capitalized. What is your answer? What is your answer, friends? Yeah, of course, it should recognize this license as an intangible asset because it is purchased separately. It is a case of separate acquisition. Okay, it is a separate identifiable asset, right? So this license should be recorded at 100 lakhs rupees. Okay, this license should be recorded at 100 lakhs rupees, 1 crore rupees. So it is an intangible asset. Okay. Second, it also purchased another company at start of the year. So first we were talking about license. Now it is talking about a company acquisition. As part of that acquisition, X Pharmaceutical Limited acquired a brand with a fair value of 300 lakhs based on the sales revenue. The life of the brand is estimated at 15 years. See, I told you internally generated brand goodwill is not going to be capitalized. But this is a case of business acquisition. And when I say business acquisition means the acquirer is paying a consideration for acquiring these intangible assets as well, right? So why acquirer will pay extra? Because acquirer is forcing some intangible asset. Acquirer is forcing some intangible benefits, right? So as a part of the business acquisition, this company has also acquired a brand with a fair value of rupees 300 lakhs based on sales revenue. The life of the brand is estimated at 15 years. Okay. Okay. So guys, whether this brand will be capitalized or not to be capitalized, although it is not meeting the separable criteria, but in case of acquisition, the company is paying extra for that, right? So in case of acquisition, it has to be capitalized, right? Because it is separately identifiable. Okay. When I say separately identifiable, it is not separable, it is not separate from the company. But since the company is paying for that, in case of business acquisition, so the standard says that if the company is actually paying for that, there is a rebuttable presumption that it will meet the identifiability criteria. Okay. What about second? Is it capitalized or not to be capitalized? Yes, the company has paid. The company has paid for it, and hence it is going to be capitalized. It should recognize the brand as an intangible asset because it is purchased as part of the acquisition and it is separately identifiable. The brand should be amortized over a period of 15 years, right? And hence this brand has to be recorded at 3 crore rupees. Question number 3. The company has spent 1 crore rupees on an advertisement campaign during the first 6 months. Subsequent sales have shown a significant improvement and it is expected that this will continue for 3 years. Guys, the company has spent huge money on the advertisement and promotion. Okay. And the company has seen that there is an improvement in the sale. And the company is expecting that this significant improvement in sale will continue for the next 3 years. So friends, can we capitalize this 100 lakhs rupees? Can we capitalize this 1 crore rupees? Can we capitalize this 1 crore rupees? What is your answer? I have received 3 answers for that. That point number 3 has to be expensed off. They is saying it has to be expensed off. Sairam is saying it has to be expensed off. Yes. So the first one is going to be capitalized. The second one is going to be capitalized. The third one is going to be expensed off. It is advertisement cost, right? Advertisement expense of rupees 1 crore shall be expensed off. Point number 4, it has commenced developing a new drug. When I say drug, it is a medicine. It is not a drug. Okay. The project cost would be 10 crore, 100 lakhs. It is 10 crore, right? Clinical trial proved successful and such drug is expected to generate revenue over the next 5 years. See, it is given that the project cost is given. Cost can be measured reliably. 10 crore. And the clinical trial, the testing has been proved that this drug is successful, right? And it will expect future economic benefit over the next 5 years. Cost incurred till 31st March 2001 is 5 crore rupees. Balance cost incurred during the financial year is 5 crore rupees, right? Now tell me, what is the accounting treatment for this? So friends, the total estimated cost is 10 crore rupees. The cost already incurred is 5 crore rupees, and the balance cost which has to be incurred in the next year will 5 crore rupees, right? So how much amount has to be capitalized? So it is entire development cost, right? So the information about research phase has not been given, and it is written that the company has commenced developing a new product, drug A, and the clinical trial has made it successful, and the cost is measured reliably, the future economic benefit is probable. So the company has to capitalize this 10 crore rupees as an intangible asset under development. The development cost incurred during the financial year 2001-2 should be capitalized. Cost of intangible asset as on 31st March 2 will be opening cost 5 crore, development cost incurred in 2001-2 is 5 crore. So the total cost will be 10 crore, right? So it is again going to be capitalized. Point number 5. It has also commenced developing another drug B. It has incurred 50 lakh rupees towards research expenses till 31st March 2002. So the company is also developing drug B, okay? And the company has incurred 50 lakh rupees towards research expenses. Clearly, it is given in the question that till 31st March 2 on the next drug, on the next medicine, the company has incurred 50 lakh rupees on research phase. The technical feasibility has not yet been established. The technical feasibility is still going to be established, right? So what is the treatment of this 50 lakh rupees? It has to be charged to expense, right? It has to be charged to expense. Research expense of 50 lakh incurred for developing drug B should be expensed off since technical feasibility has not yet established, right? Is it clear? Is it clear, guys? We have also completed one case study from Institute Study Material, right? So friends, it's 8:22 now. Let's have a 10 minutes break, right? Let's have a 10 minutes break. And after that, we will start at 8:33, right? So till the time, if you have any queries from the last class or from the today's class, please post your query, okay? And I will answer to your queries after this break. Students, let me look at the query box if you have any query. Jay is asking, sir, internally generated brands versus internally generated intangible asset. So Jay, internally generated brand are also not allowed to be capitalized or recognized, right? So there is internally generated brand, internally generated goodwill, internally generated customer relationship, customer list. So these kind of intangible assets are not going to be capitalized. But if a company is acquiring another company, and of course the company is paying extra, why the company will pay extra? The company will pay extra for these kind of intangible assets. So in this case, this has to be capitalized, right? For example, if you have seen a lot of startups, right? So if an established company is buying a startup, so why they are buying the startup, although these startup are loss making companies, and still these companies are paying hundred of crores and let's say lakhs of crores for buying these startups. So just due to its brand name, right? When Walmart has acquired Flipkart, so they have paid around lakh of crores for acquisition of 51% stake in Walmart, 51% stake in Flipkart, right? Why? Because this Flipkart become a brand name, first of all. The second, they have paid for the brand. The second, they have paid for the market share. They have paid for the customer base, right? Because as far as Flipkart is concerned, so Flipkart, including Myntra, they were number one or number two as a e-commerce in the apparels, right? They were number one or number two in the electronics as well. In the sale of mobile, at times they were number one, right? So for these kind of things, Walmart is paying extra huge money for buying this Flipkart. So hence these kind of things are required to be capitalized as an intangible asset, right? Apart from goodwill, of course. So now coming to the subsequent measurement. Okay. So friends, we have discussed about the initial measurement. Now we'll talk about the subsequent measurement. And if I talk about subsequent measurement, like in property, plant and equipment, what we have discussed, initial cost, subsequent cost. Initial cost means cost at the time of initial recognition. Subsequent cost means the cost which have been incurred subsequent to the initial recognition. And in the subsequent cost, we have discussed inspection cost. We have discussed major replacement cost. We have discussed major replacement cost, overhauling cost, inspection cost. If there are major repair, major expenditure, okay. And you remember we have discussed a case study of machine and turbine, truck and engine, right? But in case of intangible asset, generally the subsequent cost will not be there. There is no subsequent inspection, no subsequent replacement or repair, right? So these kind of expenditure will not be there in case of subsequent, in case of intangible asset. And hence generally the concept of subsequent cost is not there, but we are talking about subsequent measurement. When I say subsequent measurement, I am talking about subsequent measurement at the reporting date. Okay, at the reporting date. Okay, guys. So in case of subsequent measurement, we have two models. Can you tell me which are the two models are there in case of subsequent measurement? So once the company has recognized an intangible asset, subsequently initially recognized an intangible asset, and intangible asset has been recognized at cost, right? Subsequent measurement. So subsequently, what is the criteria? What is the subsequent measurement criteria? At the reporting date, what are the different models? What are the different ways according to which the company can measure the intangible asset? For example, initially the company has measured the intangible asset, right, at cost. Subsequently, can the company restate this intangible asset at fair value? Can company do that? Yeah. What is your answer? Science, Srinidhi, Jay, what is your answer? Utkarsh is saying yes. What are the two models? Subsequently, intangible assets can be measured using cost model or revaluation model, cost model or revaluation model, right? Cost model or revaluation model, right? And this concept of cost model or revaluation model go by the class of asset, right? Whatever model the company will apply, it should apply consistently, to that class of asset. And what is meant by class of asset? 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 Class of asset means grouping of same asset, means grouping of similar asset having same nature and use in entities operations. Okay, in entities operations. Example, class of asset example could be software, right? Patents, trademarks. Okay, then your intellectual property rights, IPR. Okay, so these could be technical know-how. This could be the example of class of asset, right? Class of intangible asset. Licenses, mining rights. Okay, so going by the class of asset, for example, if the company has 3 patents, right? Patent A, patent B, and patent C. If the company has 3 patents, patent A, patent B, and patent C, so the company has to apply whatever model the company wants to apply. For example, company A is saying patent A, I want to apply revaluation model for patent A because the patent A price has been increased. So the demand for this particular medicine has been increased, and that is why the formula for this, the formula or patent for this medicine is the price of this the price of the formula for this patent or this medicine has been increased, you know. So the company wants to apply revaluation model to this patent, revaluation model, but company wants to stay with the cost model for patent B and C because the price has not been increased. Okay, so company wants to stay with this model. So this is not a right treatment, this is not a correct treatment. Okay, so if company wants to apply revaluation model to patent A, in this case company has to apply the revaluation model to all these 3 patents, right? So this is the right treatment. Okay, this is the right treatment. So friends, first of all, I'll recommend, before understanding or before going through Ind AS 38, just go through with the Ind AS 16. Okay, so once you will complete Ind AS 16, you will have a lot of revision of Ind AS 16 while reading Ind AS 38. Like this subsequent measurement, cost model, revaluation model, whatever I'm discussing, it is just like a revision of Ind AS 16, right? So you will have 2 benefits. One, you will be able to understand Ind AS 38. Second, you will be able to revise Ind AS 16. So I would recommend, please go through Ind AS 16 first, then come to Ind AS 38, right? So we discussed this class of asset concept, and I hope this class of asset concept is clear to everyone. This is the same concept which we have discussed in our Ind AS 16, right? And there are 2 models, cost model or revaluation model. Now, what is cost model and what is revaluation model? So coming to the cost model and coming to the revaluation model. Okay, so this is my cost model and this is my revaluation model. So coming to the cost model, in this model, intangible asset has to be carried at cost, right? And what is the definition of carrying value? In this case, how carrying amount will be calculated? Carrying amount is equal to original cost, or let's say simple, I'll write it as cost minus accumulated. In PP, we have read depreciation. Here we'll call it as amortization. For intangible asset, word amortization is going to be used. Accumulated cost minus accumulated amortization minus accumulated impairment losses, right? In this model, intangible asset has to be measured at fair value. And when this model is feasible, when this model is applicable, intangible asset has to be measured at fair value if active market exists. Okay. If there is no active market for intangible asset, you cannot go by the valuation technique, right? If there is no active market, you are not required to follow revaluation model. This model is not applicable. But if there is active market for intangible asset, right? In this case, you can opt for revaluation model. And what is the carrying amount? How this carrying amount will be calculated in case of intangible asset using revaluation model? So again, carrying amount is equal to revalued amount, because this fair value will replace your original cost, will replace your earlier value. Revalued amount minus subsequent, because once you have taken it to the market value, it becomes your today's value, right? So revalued amount minus subsequent amortization minus subsequent impairment losses. Minus subsequent impairment losses. Yeah, clear? Minus subsequent impairment losses. Sir, whether revaluation has to be done at every reporting date, okay? If no major volatility in prices, if no more major volatility in the value of intangible asset, then do the revaluation in 3 to 5 years, okay? But if major volatility is there, then do the revaluation more frequently. If major volatility is there, then do the revaluation more frequently, right? So this is the revaluation model, right? This is the same model which we have discussed in Ind AS. It's 16, property, plant and equipment. So let's discuss this concept, then we'll move to the next concept in revaluation model. So in case of subsequent measurement, the company can choose either cost model or revaluation model as its accounting policy. If an intangible asset is accounted for using the revaluation model, all the other asset in its class shall also be accounted for using the same model, unless there is no active market for those assets, right? Accounting policy should be applied to the whole of a class of intangible asset and not merely to individual asset within a class. I have told you, I have just explained with the example of patent A, B, and C, right? The company can choose either cost model or revaluation model as its accounting policy. While using the cost model, the carrying value is equal to cost minus accumulated amortization minus accumulated impairment losses. After initial recognition, an intangible asset has to be carried at revalued amount, being its fair value at the revaluation date. And what is the formula for carrying amount? Revalued amount on the date of revaluation minus subsequent accumulated amortization minus subsequent accumulated impairment losses. For revaluation under this standard, the fair value shall be determined by reference to an active market. There must be an active market. If active market is not there, you cannot go for revaluation model, right? If a single item of intangible asset is revalued, then the entire class of intangible asset to which that item belongs should be revalued. If patent A is going to be revalued, patent B and C is also going to be revalued. The only exception is if there is no active market for those assets. For example, for patent A, there is an active market. For patent B, there is an active market. For patent C, there is no active market. So in this case only, the company can apply revaluation model for patent A and B, but the company can choose to continue with the cost model for patent C. And the company has to disclose this exception. The company has to disclose this situation in its notes to accounts, right? What is meant by class of asset? A grouping of asset of a similar nature and use in an entity's operations. Okay, is it clear? Is it clear, guys? And coming to the revaluation model, valuation need not to be performed every year or at every reporting date. It has to be performed at sufficient regularity such that the carrying amount does not differ materially from the fair value. Okay, so it has to be done at sufficient regularity. Where movement is in fair values are volatile and significant, then frequent revaluation, otherwise 3 to 5 years. If movement in fair values are not volatile and not significant, then 3 to 5 years. If it is significant, then significant and volatile, then frequent revaluation will be there, like at every reporting date, right? Is it clear? Okay, so now discuss the concept of revaluation increase and decrease, right? Although it is the same concept, which we have discussed in India 60. So now let's discuss revaluation impact. So we are discussing revaluation impact. Example, following details are given for patent for mining rights license. Okay, acquisition date, April 2018, right? So the cost of the license was, let's put here case 1, case 1, case 2. Case 1, case 2, right? Then fair value, 31st March 19, 31st March 20. Case 1, the price was, let's say, 10,000 rupees. Just I'm taking an example of 10,000 rupees. It become to the fair value become 12,000 because there is demand for this mining right has been increased and the fair value become 12,000 rupees. And subsequently, let's say it become again 15,000 rupees on 31st March 20, and on 31st March 21, it dropped down to 9,000 rupees. Case 2, again it was 10,000 rupees. It become 9,000 rupees. It become 8,000 rupees. It become 12,000 rupees. Right. So these values are given. Now, what is the example? So, advise the treatment of the given information if the company has opted for revaluation model, right? So now coming to case 1. Okay, 1st April 18. What is the accounting entry on 1st April 18? What is the accounting entry? Intangible asset in mining right. Let's say intangible asset. I'll write here intangible asset account debit to bank account, right? To bank. What is the value? 10,000 rupees. 10,000 rupees. On 31st March 2019, what is the accounting entry? This 10,000 become 12,000. What is the accounting entry, guys? This can become 12,000. What is the accounting entry? Again, intangible asset has to be debited because the value has been increased. So asset account debit by how much amount? 12,000 minus 10,000. To bank, nothing is purchased, nothing has been paid. To revaluation surplus, OCI, to revaluation surplus, OCI, right? 2,000. On 31st March 20, again the value has been increased to 15,000. Again, intangible asset account debit to revaluation surplus account. And what is the amount? The amount is 15 minus 12. Again, it has been increased by 15 minus 12, 3,000, right? And if I talk about the balance sheet number, so what is there in balance sheet? Intangible asset and revaluation surplus, right? Revaluation surplus. So if I talk about on 1st April 18, my intangible asset is 10,000 and my revaluation surplus is 0. If I talk about here, my intangible asset is 10 plus 2, 12,000 and my revaluation surplus is 2,000 on 31st March 19. If I talk about 31st March 20, my intangible asset is 15,000 and my revaluation surplus is how much? 2,000 was the opening balance, 3,000 is the incremental, 5,000, right? March 21. What is the accounting entry on 31st March 21? This intangible asset of 15,000 become 9,000. There is a drop of 6,000. So of course, intangible asset has to be credited. Intangible asset has to be credited. There is a drop of 6,000. 15 minus 9. 15 minus 9,000. Friends, the value has been down by 6,000. Now tell me, what is the debit entry? Tell me what needs to be debited. What should be debited here? Srinidhi, Jay, Sainam. What needs to be debited here? First of all, the value has been declined by 6,000. So first of all, you need to adjust your revaluation surplus. Whatever revaluation surplus lying in your books of accounts, you have to adjust that. So revaluation surplus account debit. By how much amount? By 5,000. Okay. So now this revaluation becomes 0. Okay. And still you have a debit balance of 1,000. So what will be the entry for this debit balance of 1,000? This will be P&L account debit. Impairment. This will be impairment loss. P&L account debit. So with this, you need to debit your P&L. Now, what is the balance of intangible asset? 15 minus 6, 9,000. And this is 0. Your revaluation surplus will become 0. So guys, if there is a revaluation surplus, you need to credit the revaluation surplus in other comprehensive income. If again subsequently there is an increase in the value of the asset, you need to again debit your asset, credit your revaluation surplus. If subsequently there is a decrease, then whatever amount, to the extent of amount you have increased, or to the extent of amount which is available in OCI, you have to adjust your losses with that OCI reserve, with that revaluation surplus which is there in OCI. If there is a decrease due to this revaluation, if there is a decrease and this decrease is beyond the earlier increase, then to the extent of earlier increase, we need to debit the revaluation surplus. If it is beyond the earlier increase, we need to debit the P&L account, right? So this is the way how we need to treat our revaluation surplus. Okay, clear? You're right, Srinidhi. You're right, Sairam. Good guys, that you are able to understand it very clearly. And I hope the way I am presenting with the accounting entry, I hope you guys are found it useful as well. Yeah. Again, in this case, intangible asset, same accounting entry, intangible asset in case 2, intangible asset account debit to bank account, right? So this is my case 2. And the value of the intangible asset is 10,000, revaluation surplus is 0 in this case. Okay. On 31st March 19, what will be the accounting entry? On 31st March 19, the accounting entry will be on 31st March 19, the asset value has been decreased from 10,000, it become 9,000. So first of all, intangible asset will be credited, right? To intangible asset. And what will be debited? There is a decrease. P&L account will be debited. Impairment loss will be debited. And what is the value? 10 minus 9. 1,000 has been debited. Okay. So there is no revaluation surplus. And what is the P&L which we have debited so far? So here it is 0 and here it is 1,000. Revaluation surplus is 0. What is the value of intangible asset? 10 minus 1. Okay. Subsequently, again, the value has been declined by 1,000 more. It become 8,000. So again, accounting entry will be P&L account debit to intangible asset. And what is the value? 9 minus 8, 1,000. There is no revaluation surplus. And what will be the amount of the P&L which we have been debited so far? It is not a balance sheet number, but just I am talking about how much P&L we have debited so far. So till 31st March 20, we have debited 2,000 rupees of P&L, right? Although this is not a balance sheet number. On 31st March 21, this 8 become 12,000. Of course, I need to debit my intangible asset. Of course, I need to debit my intangible asset because the value of the intangible asset has been increased. So by how much amount I need to debit my intangible asset? 12 minus 8. 4,000. And I need to credit. What I need to credit, guys? What I need to credit? I need to credit P&L. First of all, in case of subsequent increase, first of all, I will credit my P&L to the extent which I have already debited, right? I need to credit my P&L to the extent of 2,000 rupees. And the remaining 2,000 rupees will go to revaluation surplus OCI. Revaluation surplus, right? This will go to OCI. 4 minus 2, right? And now here the value will become 8 plus 4, 12,000. And coming to the revaluation, the amount lying in revaluation is 2,000. And coming to your P&L, there will not be any P&L impact because 2,000 was earlier P&L which has been debited, and now it has been credited. It becomes 0, right? It becomes 0. I hope it is clear to everyone, friends. Let me know if you have any query. Guys, let me know if you have any query. Otherwise, let's move on. Yeah, good. So let me move on now. So friends, we have discussed in case of revaluation model, if first time there is an increase, it will go to revaluation surplus other comprehensive income. Again, if there is an increase, again asset will be debited and revaluation surplus will be credited. If first time there is an increase and then it is a decrease, in that case, the decrease has to be first adjusted from the revaluation surplus. Then if excess decrease is there, it will go to P&L, right? First time there is a decrease, that decrease will go to the P&L. If first time there is a decrease, this decrease will go to P&L. If the subsequently again there is a decrease, again it will go to P&L, right? In like example of my case 2, okay, case 2, right? So if initially it was in decrease and subsequently it was increased, then you need to first charge to P&L to the extent of earlier debit. To the extent of earlier decrease, you need to credit your P&L. You need to credit your P&L, right? Then whatever left, it has to go to revaluation surplus. Okay. The transfers from revaluation surplus to retained earnings are made in following circumstances and are not made through profit or loss. Now the question arises, sir, we understood the concept of revaluation. We understood the treatment of revaluation surplus. If increase, it will go to revaluation surplus, it will go to OCI. If decrease, it will go to P&L. And subsequently, whatever decrease or increase happens, if the balance is lying, wherever the balance is lying, that balance has to be used first, right? As simple as that. Sir, if I have recognize an intangible asset, or let's say measure an intangible asset at fair value, there is a revaluation surplus, and I have I have sold off that intangible asset. What is the treatment of revaluation surplus? The same treatment is there what we have read in Ind AS 16. And guys, this slide is just cut copy paste from Ind AS 16. If we have disposed of this revaluation, if we have disposed of the intangible asset, in that case, at the time of disposal, at the time of derecognition, whatever amount which is lying in OCI, whatever amount which is lying in revaluation surplus, it will go to retained earnings. This non-distributable reserve will become distributable. It will go to retained earnings. And what is the accounting entry? The accounting entry will be revaluation surplus account debit, surplus account debit to retained earnings account, right? So it will not route through P&L. It will be routed through balance sheet to balance sheet. Revaluation surplus account debit to retained earnings account. Sir, what happens? So although you have told us about derecognition, if the asset is sold off, the entire amount of OCI of revaluation surplus will go to retained earnings. But if, for example, I want to utilize this revaluation surplus during the life cycle of the asset, then standard says that when the asset is getting used, okay, so the difference between, it is not depreciation, it is amortization, because I have just copied the same slide, that is why it is depreciation is there. So difference between the amortization based on the revised or revalued carrying amount and the asset original cost will charge off to the retained earnings, will charge to the retained earnings. For example, the original cost of the intangible asset was 10,000. The life was 10 years. So what is the amortization? It is 1,000. Now, the fair value at the company has opted for revaluation model, and the fair value become 20,000. Now, what is the cost? So the cost has been replaced with the revalued amount. The revalued amount, it become 20,000. So for example, initially it's what 1,000, and on the basis of the original cost it is 1,000. On the basis of revised value, it become 2,000. Amortization become 2,000. So standard says that the difference between the amortization based on the revalue amount, which is 2,000, versus that amortization based on the existing, I mean to say original cost, which is 1,000. So difference between 2,000 and 1,000, 1,000, right? To this extent, every time, every year, the company can debit revaluation surplus and the company can credit retained earnings. But this transfer will always happen balance sheet to balance sheet. This transfer will always happen from revaluation surplus to retained earnings, right? Is it clear? Is it clear, friends? Jay is saying, sir, crediting P&L would be restating earlier profits. So Jay, earlier we have a debit, right? Earlier we have an impairment loss. So we have booked an impairment loss in the P&L. In the current situation, the market has revived, the fair value has been increased, and now it's a time for reversal of an impairment loss. So that is why, since this reversal of an impairment loss is happening in this year, so we need to credit our P&L, right? When there was a decrease, we have debited our P&L, right? Okay. So to the extent we have debited the P&L, because when earlier it was loss, we have debited our P&L and we have reduced our distributable reserve. But if today the market has revived and the fair value and the fair value has increased, so of course, if yesterday I has made a loss to our shareholders, now I have to recoup that loss and I have to give this profit to the shareholder, right? So that is the right approach. So that is why, to the extent of earlier debit, we are crediting our P&L. And beyond that, we are crediting our revaluation surplus. Okay. Utilization of revaluation surplus, we have discussed that it has to be transferred to retained earnings. The same slide I have repeated. This part is this only, right? Yes. Now let's discuss this case study. Illustration number 9. Seton Limited acquired an intangible asset on 31st March 2001 for rupees 1 lakh. The asset was revalued at 1,20,000 on 31st March 2. On 31st March 2001, it was 1 lakh. The asset was revalued at 120 on 31st March 2 and 85,000 on 31st March 3, right? So if I see here, 31st March 2001, it was 1 lakh. 31st March 2002, it become 1,20,000. 31st March 2003, it become 85,000. Right? So friends, assuming that the year end for both the companies, I'm not talking about point number 2, I'm only talking about point number 1. And then I am reading the third paragraph. Assuming that the year end for both companies is 31st March and that they both use the revaluation model, you are required to show how these transactions should be dealt within the financial statement. Explain the treatment for revaluation of intangible asset. Ignore computation of amortization on them for ease of understanding. So guys, the company has acquired intangible asset on 31st March 2001 for 1 lakh. What is the accounting entry? Intangible asset account debit to bank account. And then after 1 year, the asset was revalued for 1,20,000. So the value has been increased. Then what is the accounting entry? Intangible asset account debit to revaluation surplus OCI account. And what is the value? 120 minus 10. 120 minus 1. 20,000. Again on 31st March 3, the value has been declined to 85,000. So how much is the decline? 120 minus 85. 35,000 is the decline. Okay. And what amount we have in the revaluation surplus? We have 20,000 in the revaluation surplus. So first of all, we have to credit the intangible asset by 35,000. We have to debit the revaluation surplus by 20,000. And over and above 20,000, 15,000, we have to debit our P&L. So revaluation surplus debit 20, P&L debit 15, to intangible asset 35, right? So this will be the accounting entry. Let's see here. 20,000 revaluation increase on 31st March 2002 should be credited to the revaluation reserve and recognized in other comprehensive income. Rupees 20,000 of the revaluation decrease on 31st March 2003 should be debited to revaluation reserve and remaining 15,000 should be recognized as an expense in the P&L, right? Now let's discuss the second point. Jupiter Limited acquired an intangible asset on 31st March 2001 for rupees 1 lakh. Same. On 31st March 2002, it was revalued to 85,000. And on 31st March 2003, it was revalued to 1,05,000. Now, what is the accounting entry on 31st March 2001? Intangible asset account debit to bank account. What is the accounting entry on 31st March 2002? What is the accounting entry on 31st March 2002? Guys, it become 85,000 from 1 lakh. What will be the accounting entry? 15,000 decrease. Accounting entry. P&L account debit to intangible asset. 15,000, right? So we have to credit intangible asset. We have to debit P&L, impairment loss. On 31st March 2003, so we have debited our P&L by 15,000. We have booked the loss of 15,000 in our P&L. In 31st March 2002, my profit become lesser than 20,000, lesser than 15,000. Why? Because I have an impairment loss. Subsequently, on 31st March 2003, the fair value has been increased to 1,05,000. So whatever loss I have booked, I have to credit my P&L in the current year because it is a current year situation. So what I need to credit? I need to credit my P&L. What I need to debit? I need to debit my intangible asset. So intangible asset will be debited by the difference between 85 and 1,05,000, which is 20,000. Intangible asset debit 20,000. To P&L credit 15,000. To revaluation surplus OCI 5,000. Right? So this will be the accounting entry. Rupees 15,000 revaluation decrease on 31st March 2002 should be recognized as an expense in the statement of profit and loss. 15,000 out of 20,000 increase on 31st March 2003 should be recognized as income, right? The remaining 5,000 should be credited to revaluation reserve and recognized in other comprehensive income. The above amount will be different if amortized intangible asset is to taken into consideration, right? Is it clear? Is it clear, friends? I hope this revaluation treatment, revaluation model is clear to everyone. Now let's come to the next aspect of the intangible asset, useful life of intangible asset, right? And useful life concept is very important. Useful life. So what could be the useful life of intangible asset and how this useful life can be calculated? So useful life of intangible asset arises from the contractual or other legal rights. For example, there is a license and government of India has given that license or given that right for 15 years. Then what is a useful life? It is a contractual life is 15 years, right? So useful life of intangible asset generally arises from contractual or legal right, and it shall not exceed the period beyond your contractual or legal right. Sir, in your example, if government of India has given a license for 15 years, but the company is expecting the future economic benefit only to the next 10 years. Okay. For example, government of India has given a formula for COVID vaccine free of cost to a company, let's say Revaluation. I'm taking an example. And it is for next 10 years. But Revaluation is expecting that in the next 5 years, everyone in India will get vaccinated and the antibody will develop, right? For example, you can see the third wave. In the third wave, a lot of people were having, fever and cough and cold, right? So I have also went through the third wave and still I'm having some cough and cold, right? So friends, nowadays COVID is like cough and cold, extreme cough and cold and fever. Okay. So slowly and gradually the antibodies are getting developed between the people. And now the threat, or let's say I can say that the fear of COVID is slowly and gradually is getting away in the life of the people, right? So friends, in this case, government of India is providing this right for 10 years. But this Revaluation is not expecting that I will have a future economic benefit beyond 5 years. So in this case, what is the useful life of this intangible asset? In this case, the useful life of the intangible asset maximum is 10 years, but this is not the case because the future economic benefit is expected by the entity is only 5 years. So in this case, the useful life of asset is 5 years, right? So this is 5 years. So friends, coming to the useful life of intangible asset concept, let me put it here on this Excel file because you will have this file with you always. Useful life of intangible assets. Okay. Useful life is driven by contractual or legal rights. Okay. Contractual or legal rights. Useful life is driven by contractual or legal rights. Example is given by contractual legal rights. It shall not exceed the contractual or legal period, but the life may be shorter than such contractual or legal period. Okay. Example. The government of India has given mining rights to X Limited for a period of 10 years. X Limited is expecting future economic benefit for a period of 5 years only and expecting to use this rights for 5 years. Right? what is the useful life? Useful life in this case. So in this case, what is my contractual life? What is my contractual period? My contractual life is 10 years. But my useful life will not be 10 years. My useful life is equal to 5 years, which is period over which I'm expecting the future economic benefit. Right? Right, guys? Is it clear? Is it clear? I hope it is clear to all of you. I'm also putting these class notes into the Excel file so that you will have this Excel file. Okay. You can download this Excel file from the portal and you can have this entire material. Is it clear? Useful life shall not exceed beyond contractual or legal right, although it could be shorter than the contractual or legal life, right? Now, a very important concept. Useful life of an intangible asset is, of course, could be a finite life, could be an indefinite life, right? And if it is a finite life means limited period of benefit to the entity. For example, in all these licenses, Government of India is giving a spectrum license to telecom entities. And there is a life of 20 years, 30 years for these spectrum licenses. Government is giving a mining right. Of course, the life is limited, like 10 years, 15 years, 5 years, right? So in this case, we can say that this is a finite life, okay? And wherever there is a finite life, the amortization is required. And whenever there is a finite life, of course, you have a denominator in terms of life of the asset. But in case of indefinite life, how the life could be indefinite? First of all, goodwill. For example, A Limited has acquired B Limited, and there is a goodwill of 10 lakh rupees. So is there any contractual life of goodwill? Answer is no. So in this case, the company is not able to expect or estimate that till how many years. So what is my life? My life is a period over which either it is a contractual period or it is a period over which I am expecting a future economic benefit, right? So I am not able to determine what is the period over which I am expecting what is the period over which I will get the future economic benefit. So it means it is an indefinite life. It is an indefinite life. And since indefinite life is there, so there is no concept of amortization. If you don't have denominator, then how can you, with which value you will divide, right? For example, in the first case, the cost of the asset was 1 lakh rupees and the life was 10 years. So 10,000 was my amortization. But in the next case, if 1 lakh rupees the cost of the asset, but there was no life, the life is indefinite. There is no life because I don't know what will be the life. In that case, amortization is not possible. In that case, standard says that amortization is not possible, but mandatory impairment testing is required, right? So indefinite life means no foreseeable limit to which the period over which asset is expected to generate net cash inflow to the entity, and amortization not required in this case, right? So friends, when I talk about useful life could be indefinite, useful life could be definite. Useful life, it could be finite life, it could be indefinite life. Indefinite, okay, please write down. It could be finite life, it could be indefinite. In case of a finite life means there is a life of the asset is determined. Okay, life of the asset is determined. So in this case, amortization will required. Amortization will required. For example, cost of license is equal to 10 lakhs. Life is equal to 10 years. So what is the amortization value? So amortization is equal to, amortization will be how much? Equal to 10 lakh, 10 divided by divide by 10. It is 1 lakh. Your amortization will be 1 lakh, right? Clear? Indefinite life, entity does not foresee that the future economic benefit will be available for how many periods, for how many years, right? So amortization is not possible. Then what will happen? Mandatory impairment testing is required at least once in a year. Okay. Point number 4. Entity will review every year if the life becomes certain. Okay. If the life is determinable. Entity will review every year if the life is determinable, right? So first, what is indefinite life? The entity is not able to foresee. Contractual life is not there, and the entity is not able to foresee that it will receive future economic benefit for how many years. And since life is not there, hence amortization is not possible. But yes, impairment testing is required every year, and entity will review till the time the life becomes determinable. Entity has to review at every year and whether life becomes certain or not. Once life becomes determinable, then it becomes a finite life, and prospectively amortization will required. Yeah, guys, are you clear so far? Are you clear so far? Have you understood everything so far? Yeah. So I've also given you the notes of useful life. I have given you the notes of this concept, right? Okay. Now let's discuss the concept of amortization. So what is amortization? What is depreciation? Depreciation is a systematic allocation of depreciable amount over the useful life of the asset. Same. Amortization is systematic allocation of the amortized amount of intangible asset with a finite useful life on a systematic basis. Amortization is a systematic allocation of amortized amount of intangible asset over the useful life. Simple, right? When amortization will begin? So we have discussed that depreciation will begin when the asset is available for use. So amortization will begin when the asset is available for use, right? When amortization will stop? When depreciation will stop? Depreciation will stop when the asset is classified as held for sale or when the asset is derecognized, right? So if the asset is classified as held for sale, depreciation will stop. If the asset will derecognize, disposed of, sold off, depreciation will stop. Likewise, amortization will also stop once the asset is classified as held for sale or the asset is sold off, right? It is earlier of the date. Either the asset is classified as or held for sale or asset is actually derecognized. Clear? What could be the amortization methods? We have discussed that the change in depreciation method is a change in accounting estimate, right? So likewise, change in amortization method is also change in accounting estimate. But what is the amortization method? This amortization method will reflect the consumption pattern of the asset, will reflect the future economic benefit pattern of the asset, right? For example, if your intangible asset is providing a consistent future economic benefit, right? So we are talking about amortization method. Amortization methods. What are the amortization methods? Right. First of all, straight line method, SLM. And when this SLM will be used? The SLM will be used when future economic benefit is consistent. When future economic benefit is consistent, right, over the useful life, then SLM method will be used. So when future economic benefit is consistent, then SLM method is used. Okay, I mean to say consumption pattern is constant. All right. So just I'll write this future economic benefit as FEB. Please understand, FEB means future economic benefit. When future economic benefit is having a decreasing trend, okay. When future economic benefit is having a decreasing trend, okay, it means consumption pattern is diminishing. It means consumption pattern is also diminishing. Okay. Then which method is more appropriate? WDV method is more appropriate. WDV method, right? When future economic benefit is on the basis of usage. So we can say that the consumption pattern is also on the basis of usage. Then which method is more appropriate? Unit of digit method or production method. Unit of digit oblique unit of production, right? So this method is okay. So these are the amortization method, right? Change in amortization method is considered as a change in accounting estimate, and applied prospectively, right? It is not a change in policy, it is change in accounting estimate. Clear? So these are the three methods which we have discussed. Same method which we have discussed in Ind AS 16 property, plant and equipment as well. Okay, is it clear, friends? So amortization method may be diminishing balance, straight line or unit of production method. The amortization method used shall reflect the pattern in which the asset's future economic benefit are expected to be consumed by the entity. If pattern cannot be determined reliably, then the straight line method shall be used. If we are not aware about the pattern, then SLM method is the most appropriate method. The amortization charge for each period shall be recognized in profit or loss, unless this or another standard permits or required it to be included in the carrying value of another asset. For example, if an intangible asset has been used for production or construction of other qualifying asset, for example, software is getting used, or let's say any intangible asset is getting used for construction of a factory, in that case amortization of this intangible asset will be capitalized as per Ind AS 16. Okay, will be capitalized in the cost of factory, in the value of factory, right? Now this amortization period and amortization method shall be reviewed at least at each financial year end. At least at each financial year end, you have to review the amortization period as well as amortization method, right? When I say amortization period, you have to review useful life. When I say amortization method, you have to review the consumption pattern. Right? If the expected useful life of the asset is different from the previous estimate, the amortization period shall be changed accordingly. If the useful life will change, like PPE, you have to change the useful life and you have to apply it prospective, right? Such changes shall be accounted for as a change in accounting estimates. And such change is not a change in policy. Such change will be considered as a change in estimate, and it has to be applied prospectively. Now, friends, let's discuss this case study of illustration number 10. Okay, and This was the last important concept of Ind AS 38. And after that, we will discuss the derecognition concept. We'll not discuss disclosure. It will not come in your exam. It is a theoretical aspect of it. So let's discuss this illustration number 10. Okay. And if you have any query so far from the last session or from this session, you can raise your query. You can write your query on the query box. X Limited engaged in the business of manufacturing fertilizers entered into a technical collaboration agreement with a foreign company, Y Limited. Okay. So X Limited is in the business of fertilizer, and it has a technical collaboration agreement with a foreign company, and foreign company is Y Limited. As a result, Y Limited would provide technical know-how enabling X Limited to manufacture fertilizer in a more efficient way. This Y Limited has an advanced manufacturing process. Okay. And when this Y Limited will share its advanced manufacturing process, so X Limited will be able to fertilize, will be able to manufacture this fertilizer in more efficient way. It will give more productivity, more efficiency. X Limited paid 10 crore rupees, 100 lakhs. X Limited has paid 10 crore rupees for the use of know-how for a period of 5 years. There is an agreement that this technical know-how has been used by X Limited for a period of 5 years, right? And X Limited has to pay a consideration of 10 crore rupees. X Limited estimate the production of fertilizer as follows. And this is the estimates which is given for the production of fertilizer over a period of 5 years. The contractual life is 5 years. Now the question arises, if I need to amortize this 10 crore, of course, over a period of 5 years, should I use straight line method? Should I use WDV method? Should I use my unit of production method? So first of all, my dear friends, tell me, SLM method is generally used when no consumption pattern, no future economic benefit is, the pattern is identifiable. Here, the pattern is given, right? So first of all, I need to see whether the estimated future economic benefit is consistent over the period. It is not consistent. It is given that in the first year, 50,000 ton metric production, 50,000 ton production will be there. In the second year, 70,000 tons production will be there. In third year, 1 lakh ton production will be there. Fourth year, 120, and fifth year, 1,10,000 production will be there, right? So it is not consistent, first of all. It is not diminishing. It is not like that the first year 120, second year 110, third year 1. It is not diminishing also. So straight line method is not appropriate. WDV is not appropriate. Then which method we need to follow for the accurate amortization? For the best way to calculate the amortization, which method we need to follow? Trinidhi, Sairam, Jay, Utkarsh, Megha, which method we need to follow? Please tell me. At the end of first year, it achieves its targeted production. So whatever first year target was 50,000, it have achieved. It has achieved the first year targeted production. At the end of second year, 65,000 metric ton of fertilizer was being manufactured. Instead of 70, it becomes 65,000. The actual production, if I talk about the actual production here, in the first year, this 50,000 was there, actual production. In the second year, instead of 70, 65,000 production was there. And X Limited considered to revise the estimate for the next 3 years. And since the next 3 years, this actual production is not there, but X Limited has revised. So actual is only two things, only two for the 2 period. But here X Limited is revised the estimate for the next 3 years, and the revised figure was 85,000 for third year, 1,05,000 for fourth year, and 1,15,000 for fifth year, right? For fifth year. So this is the revised target. Okay. So how will X Limited amortize the technical know-how fees as per Ind AS 38? First of all, we need to see what is the best method, what is the appropriate method by which this intangible asset can be amortized. Of course, it is unit of production method. It is unit of production method. Okay, it is unit of production method. So let me calculate. Let me solve this case study on Excel file so that you will have a more clarity on this. This is illustration number 10. Illustration number 10 of ICAI study material, right? In this example, in this question, unit of production, method of amortization will be most appropriate method, right? So first of all, what will be the amortization in year one? So first of all, let's put years here. So 1, 2, 3, 4, 5. Okay. 1, 2, 3, 4, 5. Okay. Initial estimate, right? So initial estimate was how much? 50,000, 70,000. Okay. 1 lakh, 1,20,000 and 1,10,000. Okay. This was my initial estimate. So what is my amortization in year one? So actual production is also given. In year one, actual production was 50,000. In year two, actual production was 65,000. Right. And revised estimate. What was the revised estimate? What is the revised estimate? Estimate at end of year two. What is the revised estimate at the end of year two? What is my revised estimate at the end of year two? What is my revised estimate at the end of year two, guys? When I talk about the revised estimate at the end of the year two, so of course, this actual will come, this will come, and the revised estimate will become 85,000, 1,05,000, and 1,15,000. Okay, this is my revised estimate. Clear? Is it clear? So now I have to calculate my amortization. Okay, so how this X Limited will amortize this know-how. Okay, so first of all, going by the initial estimate, what is my initial estimate? It is 4,50,000. Okay, what is the revised estimate? The revised estimate is 4,20,000. So calculation of amortization in year one. Calculation of amortization in year one. In year one, you have to go by the actual. You have to go by the first initial estimate. So calculation of amortization in year one on the basis of initial estimate. Why? Because this revised estimate have been revised in the third year, in the second year, on the basis of initial estimate. Right? How to amortize my what is the cost of the asset? What is the cost of this know-how? What is the cost of know-how? The cost of know-how is 10 crore. So cost of know-how is how much? It is 10 crore. Cost of know-how is 10 crore. 10 crore. 10, 100, 00, then 50. 1, 2, 3, 4, 5. So it is 10 crore. Okay. So after 1, there will be 80. 100 million, 10 crore. Then amortization will be, amortization is 10 crore multiplied by 50,000, which is again actual production, divide by 4,50,000, right? So it comes out at 1 crore. Comes out 1 crore 11,11,111. So this is my amortization in the year one, right? Then what about year two? What about year two? Calculation of amortization in year two. Tell me friends, what we will do in year 2? What we will do in year 2? Yeah? What we will do in year 2? In year 2, the actual production was 65,000, right? And there is a estimated in the year 2 that the target has also been revised. So what is my prospective life? My remaining life is 4 years. What is my carrying amount? So first of all, calculation in year 2 on the basis of revised estimate. Right. You can write here revised estimate at the end of year 2. You can write this year 2 for 4 years, next 4 years. Or you can write here also revised estimate at end of year 2 for current was actual, current and next 4 years, right? Current and next 3 years. Because we have to apply it prospectively, so we need to see this prospectively, right? So what is my this? What is the total? The total is this 3,70,000. So you have to calculate the amortization prospectively. You need to see the carrying amount at the beginning of second year. What is my carrying amount at the beginning of second year? 1 crore minus 1 crore 11 lakh. Now what is my units produced during the second year? Unit produced is my 65,000. What is my total estimate over 4 years? It is 3,70,000. What is my amortization? This multiply by 65 divide by 370, right? One crore 56 lakh 15,616. This is my amortization. Okay. I hope you got this. I hope you got this thing. I hope you are able to understand this concept because we are applying prospectively. Right? It comes out at 156,615,616. And what about calculation of amortization in the next years? Calculation of amortization in year 3 to 5. In year 3 to 5. In year 3 to 5, of course, we need to use the same carrying value which was there at the beginning of year 2. Okay. So amortization will be in year 2 will be how much? This multiply by 85,000 divided by 3,70,000. Okay. This is my year 2 amortization in year 3. This is my year 3. Amortization in year 4 will be year 4. This will be again opening carrying value when this estimate was revised, multiply by 1,05,000 divide by 3,70,000. Amortization in year 5. This multiply by 1,15,000 divided by 3,70,000. Right? So this will be the amortization, right? So this is the total amortization. So this is how this amortization will be there. So if I plot this amortization here, what will be my total amortization? My total amortization will come in the first year. In the first year, it will be 1 crore 11,11,111. In the second year, it will be 1 crore 56 lakh, right? So why this become 1 crore 56 lakh? Because of course this catch up will be there, and so on and so forth. So it is on the basis of production. It is on the basis of production. This is my entire 10 crore, right? This is my 10 crore is the total value. So this is how this amortization has to happen, right? I hope it is clear to everyone, guys. Clear? Let me see if you have any doubt. Do you have any doubt, or should I continue? Do you have any doubt? Guys, let me know if you have any doubt. Otherwise, I'll move on. I hope you have understood this calculation, and I have done the calculation for entire 5 years, right? So whenever there is a change in estimate, you have to calculate the prospective amortization or depreciation basis the revised carrying value on the date of estimate. Basis the carrying value on the date of change in estimate, right? Srinidhi, Jay, Sairam, Utkarsh, Megha, is it clear to everyone? Is it clear to all of you guys? Is it clear, friends? Okay, let's move on. We have discussed this concept. Indefinite useful life. I have told you that in case where useful life is indefinite, the company has to review in each period, in every period, that once this indefinite becomes finite. Okay. An intangible asset with an indefinite useful life shall not be amortized. Of course, if we are not aware about the life, how can we amortize? An entity is required to test for impairment by comparing its recoverable amount with the carrying value, right? And there is a mandatory impairment testing in case of such assets which is having an indefinite useful life as per Ind AS 36. Okay. Coming to retirement and disposals, of course, an intangible asset shall be derecognized. When it has to be derecognized? When it has been actually sold off, right? Which has been actually sold off. Or an intangible asset shall be derecognized when future economic benefit is not expected from its use or disposal. For example, there is a formula which is with a pharmaceutical company, and I still remember there was a formula, or there was a vaccine for malaria which has been banned by the government, right? So there was a patent or a formula on the basis of which the government, on the basis of which the pharmaceutical company was producing the medicine or vaccine, and they were earning lakhs of crores, right? After 6 years, government has banned that you cannot produce these kind of medicine or vaccines, right? So probably when the company has acquired that formula or internally generated that formula, the company has capitalized the cost as an intangible asset, right? And the company has started amortization as. But when the government has said that subsequently going forward, you are not allowed to, what can I say? You are not allowed to use this formula for manufacturing this medicine. So it means the future economic benefit is not expected from its use, and hence this intangible asset has to be derecognized, and whatever amount is there, that has to be charged to the P&L, right? So friends, in case of derecognition, if there is any gain or loss, I mean to say the difference between the net disposal proceeds and the carrying value. For example, the software has been sold out at 1 crore rupees. The carrying value was 1 crore 50 lakh rupees. So this loss is 50 lakh rupees, right? So this loss has to be recognized as another expense. If it is a gain, the gain should not be recognized as revenue. Please mind my word, it is not a revenue, it is other income. Revenue is from the ordinary activities of the entity. Revenue is generally from the operations. Okay. This gain is not revenue, this gain is income. Okay. So this is regarding retirement and disposals. So thank you guys. And let's have a Maggie time. In the 2 minutes, I will summarize this entire intangible asset. So we have started with the intangible asset, and we have covered in 2 sessions, which is today and day before yesterday. We have started with the objective, we have started with the scope, and then we have discussed the meaning of an asset. Asset is a resource which is controlled by the entity, resulting from the past events and which will have a future economic benefit. And we have discussed the definition of intangible asset. Intangible asset is an identifiable non-monetary asset without having a physical substance. Identifiable means either it should be separable, separated from the entity, separately sold, separately rent out, separately have a value, okay, or it has to be arise from legal or contractual rights, right? And then we have discussed non-monetary assets, means assets which are not monetary in nature. Non-monetary assets are like property, plant and equipment, investment property, your biological asset, intangible asset, inventory. These are the non-monetary asset, okay. Non-monetary asset are those assets which cannot be settled in the fixed amount of cash. The money is not determinable as of now, on which it is settled in cash, right? The money is determinable, but the cash settled is not determinable, right? And then we have discussed the mode of acquisition. We have discussed the recognition criteria, and we have said that it should meet the definition of intangible asset. Future economic benefit is probable and cost can be measured reliably. We have discussed that intangible asset has to be measured at cost. Cost means purchase price plus import duty plus non-refundable taxes minus discount and rebates plus directly attributable cost, right? Then we have discussed what is allowable cost, what is not allowable cost. Then we have discussed mode of acquisition. If it is separate acquisition, you have to measure it cost. If it is a intangible asset arising out of business combination, you have to recognize it fair value. If it is a government grant, if it is an asset which is coming out of government grant, either you have to recognize government grant and intangible asset both at fair value, or you have to recognize intangible asset at nominal amount plus directly attributable cost. In case of exchange of intangible asset, you have to recognize intangible asset acquired at fair value of the asset given up. If it is not there, then fair value of asset acquired. If it is also not there, then WDV of the asset given up, right? Internally generated brand, goodwill, mastheads, publishing title, customer relationship, customer list are not going to be capitalized, right? Internally generated intangible assets are going to be capitalized, but it has to be split into two phases: research phase and development phase. Research phase means acquisition of knowledge. Development phase means application of knowledge. In research phase, whatever money is spent by the company has to be expensed off. In development phase, if the company is able to demonstrate the 6 criteria, it can say that yes, the development phase has been started. And what is the 6 criteria? Pi rate. Please remember pi rate. The future economic benefits should be probable. Cost can be measured reliably. Technical feasibility should be there. Intention to complete should be there. Ability should be there. And resources should be there, right? If these 6 conditions are meeting, I can say that my development phase has been started. And once the development phase has been started, the amount spent by the company has to be stored in a kitty as an intangible asset under development. Once it will complete, it will become an intangible asset, right? It has to be capitalized. If entity has recognized an intangible an expense, considering a research phase expense in the P&L in the past, so subsequently in the next year, the company cannot recognize or cannot capitalize it, right? Then we have discussed subsequent measurement, and in subsequent measurement, we have discussed that cost model is there, revaluation model is there, okay? So this model has to be opted according to the class of asset, right? If you are applying a revaluation model onto a particular item of a class of asset, you have to apply this model to an entire class of asset, provided active market should be there for that particular asset, right? And in revaluation model, so of course we are doing a fair valuation on a frequent basis. If the movement is volatile and significant, you have to do on a consistent basis, revaluation consistent basis. But if movement is not volatile and not significant, 3 to 5 year frequency is more than enough, right? In case of revaluation surplus, in case of revaluation, if there is an increase, the increase will go to revaluation surplus as a other comprehensive income. If first time there is a decrease, it will go to P&L as an impairment loss. But if first time it is increased, subsequently it is decreased. So first of all, whatever balance which is lying in the revaluation surplus, that has to be adjusted to cater the decrease. Okay. If the decrease is beyond that value, again, you are required to recognize beyond that value in the P&L, okay, as an impairment loss. First time, if there is a decrease, then it is an increase. To the extent you have debited in the P&L, to that extent you have to credit your P&L in the next year, in the current year. Okay. And beyond that, you have to take it to the revaluation surplus in the other comprehensive income. Sir, how can we utilize this revaluation surplus OCI? So if you have disposed of the asset, this revaluation surplus will transfer to retained earnings. If you want to use, it is an option. If you want to use this revaluation surplus during the lifetime of the asset, then the difference between the amortization on the basis of original cost and amortization on the basis of revalued cost, that to that extent of difference, revaluation surplus can be credited to the retained earnings. Okay. Then we have discussed the concept of useful life. Useful life is a legal or contractual life, although if the future economic benefit is expected lesser than the period of contractual life, it should be a lesser period. Useful life could be finite, could be indefinite. If it is indefinite useful life, management has to do a mandatory impairment testing. Amortization will not be calculated, and at the end of every year, management has to see whether this indefinite life will become finite or not. There are three amortization methods: WDV, SLM, and your unit of production method. Change in amortization method shall be treated as a change in estimate and has to be applied prospectively. And at the end of every year, the company has to review the useful life as well as amortization method, right? Then we have discussed the concept of retirement and disposal. So an intangible asset has to be de-recognized when it is disposed of or when the future economic benefit is not expected out of it. So this was an entire summary of intangible asset in the last 2 minutes. So friends, I hope you have found these 2 classes useful. Let me know if you guys are able to understand the concept clearly, or if you have any query. So I'll wait for next 15 seconds, and after that I'll conclude the class. And I would request each one of you who is listening this class on a live basis or who will watch this video subsequently, please do all the examples of institute study material, right? So 3-4 students have written that, sir, everything is clear. Great, guys. So guys, if you don't have any query, then it's a time to end the class, to conclude the class. Thank you so much. Stay happy, stay healthy, and stay tuned. Thank you so much. Bye-bye. Take care.